Welcome to another StockOdds podcast. This is Odds and Ends with Dave Singh and Rob Friesen. Good evening, Rob. How are you today?
Hey, not too bad. Thanks for asking. Let's excited for another week here in November. Always a great month. We haven't had things go too differently than what we expected so far, so that's really nice. And let's discuss what we got for this upcoming week here.
Yeah, as usual, we're trying to get our bearings for the week and look for any trends or any big macro influences. But I studied
let me kick it off before we get into. So I'm looking at the Dow Jones futures. They are currently, at the time of this recording, up 0.06. So just they popped up a little bit more than they pulled back a little bit, right? And then we had the S&P 500 is up 0.12, and then the Nasdaq 100 is up 0.22, and the Russell finally is up 0.16. Now, out of the gate, the Russell charged full speed ahead and then has pulled back a little bit. But all of them are in a breakout category where they've already, made new highs on the year, and Russell is the most pronounced of a breaking out of a range, where the other ones have just constantly been going up. But they've all made new highs recently. And then we have a 2 to 3 day pullback, because we had a 2-day pullback with the next day was an inside day, not really making a new low. And then out of that, we had this self-correcting phenomena where we're already after a 2 to 3 day correction, we're on our way charging up again. So that's what happened on Friday, is that we rallied back up. Now, we're not back to the highs that we were at. So we've got a little bit of a distance there to go. But speaking about mid-month seasonality and speaking about November in general, there's no reason for us not to go and challenge those recent highs again. So that's the context across all of the four horsemen, right? I don't see a difference there. So expect the VIX to trade lower, expect the four horsemen to rise. I don't know as of Monday who will be in the lead, but I don't really think it matters at this point too much. They're all expected to move up higher. So I'm not an advisor. Obviously, this is just an observation. But we'll fire it back to you to talk about some sectors.
Yeah. So it looks like this is one of those situations where the momentum is so strong, even if the data were to be contrary to that, it may win out. But I looked at the seasonality window for mid-month, and there are some themes that appear. Gold seems to be strong, but not in the GLD, but is GDX, GDXJ, GDX itself. Also,
so those really, since the 1st of November, it's just been going up, 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 up. And Friday, we saw it sort of stall a little bit for the first time. I'll check on that. Yeah, Friday pulled back. No, it's actually, it's only since the futures opened. So the futures opened, it rallied up, and it's pulled back since there, and it's down minus 0.26. So since it's charged up, maybe it's going to have that like corrective phase. But if I go out and look at GLD's resistance, we have a high of around 1920, so around 1920 area, and then again another one around the 1966. So just remember, 1920 and 1966 are the two numbers for gold to go and tag on the upside. But right as of this moment, when the other ETFs are doing okay, or the futures, gold is pulling back slightly. So we'll come in Monday morning. We'll see if that is still a focus. But it's on a teeter-totter right now, it looks like to me, okay?
And SLV is expected to be down slightly as well. That can be paired with some of the gold strength.
And it's down 1.13% already as of this futures opening.
Good. And the other thing that's showing strong is oil, the XLE and the XOP, and also some of the financials, the XLF and KRE. Those are expected to be a little strong throughout the mid-month seasonality. Also, small caps are expected to outperform the spider as well, almost double the performance during this window here. I know we're kind of in the middle of mid-month seasonality. It started on the 9th and 10th day of the month, but we still have some of that strength with us. And also, yeah, again, oil should be strong, financials strong, and chips, the SMH. You're saying to continue with QQQ. QQQ statistically is supposed to underperform the spider,
Right.
but there's that momentum and the breakouts we're seeing from the past week. Same with XLK and even the diamonds. So,
well, think about the technology side, the Qs, and think about like Facebook, for example. Did you see Friday's move on Facebook was up over 4%, right?
Mm-hmm.
So there's different Qs. So far open, they're showing like they want to go up. There's no reason for them not to. So this could be a situation where some of these components within the Qs just continue to lift it, and normally during this seasonality window it would be a bit weaker, but like we'll give it the benefit of the doubt. Okay.
Sure.
Just looking at something relative to copper. So you mentioned the GDX and the GDXJ. So either it's the predictor value of a lagging response after gold's been so strong, but it also could be some of the components in there are into copper, not just gold and silver, because copper's showing strong this evening, and that may be part of the reason that we have to look at the seasonality for copper as well, not just gold.
What about oil? I mean, oil's been weak for the month, for the week, and even on Friday. Statistically, it's supposed to be a little bit stronger coming into this seasonality. What would you do with oil?
Well, I mean, like that it pulled back. We've had from the high up at on the WTI, we were just poking above 85 in October, and then we touched 85 again in November, and we've pulled back to 80.47. So about almost $5 pullback. Now, where it's sitting now, it's still a higher low than the low that we had in November. So there's no reason it can't, turn and after a few down days in a row here, streak back up. So I would say that I wouldn't necessarily be fading that. I might lean more to what the seasonality's saying, and that oil is okay.
One more question. So we're approaching Thanksgiving. The retail stocks usually do well into that traditional Black Friday, but so many retailers have been jumping the gun. They've been trying to push it back for earlier and earlier, even a few weeks earlier. So this whole month has had plenty of retail activity. Any thoughts on retail? I'm looking at the mid-month seasonality. It's just slightly better than the spider. The spider is expected at 0.3, and the XRT is expected at 0.6. So it's expected to do better through the middle of November. But any thoughts on retail, since this year is a little bit different with retailers pushing their sales earlier and earlier to beat each other?
Yeah, that trend has been happening for quite a while, but I still see that we've been pretty bullish on the retailers. And even going past Cyber Monday, Black Friday and Cyber Monday, it's really come down to who can compete with Amazon, and who's robust enough in their online stuff, not just the brick and mortar.
Mm-hmm.
There is the argument of resurgence of some of the malls too. Malls have been reconfigured to. They've lost a lot of retailers, obviously, but they're being reconfigured as town centers, kind of thing. So if you think the REITs are going to come back to some degree with the mall REITs, then the argument would be retailers could get a leg up from that again, right? So, it's I'm not going to bet against them until really after January. Like they start to do some pretty heavy discounting, and they've already pre-sold a lot of the gift cards. You have to think about that cycle as well. So like when right now they benefit from gift card sales as well, and that money then is booked and then it doesn't, and that'll go right till Christmas, and it doesn't really get spent until the next year, but they've already booked the income, right?
Mhm.
So that's part of the cycle that I would short, as I have done in the past. I short retailers in January, not until then usually.
Good. Well, that's all
So
I had on my list here.
yeah, let's just go run over a few more of the futures here. Let's just see. So we talked about oil. Natural gas is is not performing as well as oil overall. Let's see, we've got a lot of the commodity stuff. Think about who is impacted. Like, this inflation trade is still debated. We've got the infrastructure bill saying, hey, this infrastructure spending is going to lower inflation. Yellen's saying that with the COVID response, inflation should get back in check, blah blah blah. So this transitory thing is still out there, but the consumer is feeling prices at the grocery store and the gas station, everything else still going up. So think about who's affected by that. Coffee's surging again, so think about your coffee. The U.S. dollar was kind of chopping around in October and November until about Wednesday of last week, and then the dollar shot up, and it's just pulled back for 2 days. But it's was kind of, I think that was a bit of a surprise at how strong the dollar became, but it is part of this whole taper thing, right?
Mhm.
Right, because if they're going to taper and they're going to maybe raise rates, then dollar should benefit from that. So I think that's what the jump was about. Euro down, US dollar up. There's some talk about the carry trade. Inflation has been squeezing that carry trade. I don't know. We'll see. And the commodity-based currencies are coming off their highs. That's Australia, New Zealand, Canada, coming off their highs. Okay. But anyway, what about the 2-year note, 10-year note?
10 years at 1.56, so it's still pretty tame. It really has not taken off.
So that corresponds, like, the 10-year and the dollar moved together on that Wednesday and Thursday, right? So we'll have to watch tomorrow what the attitude is. Right now, I'm just going to kind of say the context for the week is that most things should be going up. When you're trading baskets, for example, we can find a lot of great longs. You can get a good edge with good longs. The trickier part is the shorts, and so you have to be more selective. And it doesn't hurt to kind of go look and see which shorts have truly been weak. Just don't take it on an algorithmic basis of just, like, pulling symbols and not even knowing anything about them. I would go that extra step to, like, really take a look at those shorts and see if you really want to be involved in them or not, because you can substitute it with a variety of ETFs, for example. You could pick a few symbols and concentrate a little bit more capital into some of the worst, most boring, like things that are mature that just aren't going up, that are just like a good hedge, but not necessarily going to run you over.
Mhm.
Okay, fair enough.
Sounds good. All right, thanks, Rob.
Yep, take care. Thank you for meeting today, and let's hit the road Monday morning.
Good luck. Thanks.
Okay.
Bye-bye.